This is the brief on Philippine bank secrecy and the plunder law. The Philippines balances strict bank secrecy with heavy-hitting corruption statutes, which is honestly kind of like trying to catch a thief in a pitch-black room where the safe is legally locked to literally everyone, even the cops. First, under Republic Act 1405, bank deposits are so fiercely confidential, they create bizarre loopholes. Like when former President Joseph Estrada signed bank documents under the fake name Jose Velarde, the Supreme Court ruled he didn't actually violate the anti-alias law. Why? Because bank secrecy guaranteed his privacy, meaning his use of the alias wasn't technically public. So if the law so fiercely guarantees privacy, how can the public ever uncover when a leader is hiding stolen money? Second, to fight back, the state wields the plunder law, or RA 7080. Estrada challenged this law, which penalizes amassing at least 50 million pesos of ill-gotten wealth, claiming it was just too vague. But the Supreme Court upheld it, stating it strictly requires proof of deliberate criminal intent. So think of plunder not as a single broken rule, but as a proven orchestrated pattern of looting the national treasury. Finally, prosecuting these massive cases is the job of the ombudsman. Take the Jaime de Chavez case. The court affirmed that the ombudsman can establish probable cause without even letting the accused cross-examine witnesses during preliminary investigations. But hey, does this sweeping executive power to fast-track corruption charges risk overriding a defendant's fundamental right to defend themselves before a trial even begins? Well, while bank secrecy fiercely guards individual privacy, the plunder law ensures that those who systematically loot the nation absolutely can't forever hide behind a vault door.
So let's talk about one of the world's most intense bank secrecy laws. We're going to dive into a high-stakes drama where a secret account, allegedly tied to a president, put that entire law on trial. It's a story packed with power, privacy, and literally billions of hidden pesos. Okay, so it all kicks off with this massive mystery that exploded during a presidential impeachment trial. At the heart of it all, a secret bank account stuffed with billions, all under this simple, totally made-up name, Jose Velarde. The big question on everyone's mind was, of course, who on earth is the real Jose Velarde? And look, the numbers here are just staggering. The official complaint claimed that former President Joseph Estrada piled up over 3 billion pesos. We're talking roughly 60 million US dollars in just a year and a half. And where did it come from? Well, the allegations pointed to everything from illegal gambling to kickbacks. You can see the stakes just couldn't have been higher. All right, so let's dig into this Jose Velarde account itself. Because this wasn't just some simple savings account. Oh no, it was a financial machine. And it was built for one thing: secrecy. And get this, the account that would eventually hold billions of pesos started with an initial deposit of just 1 peso. 1. It's almost poetic, right? A super humble, almost symbolic beginning for a scandal that would rock the country, opened at the Equitable PCI Bank in Manila. So, prosecutors started connecting the dots. They argued that even though the account was under a fake name, it was President Estrada who was really pulling the strings. And the cash flowing in? They claimed it was dirty money, including a huge payoff of almost 190 million pesos from the sale of corporate shares to the government's own pension funds. But you might be wondering, how is something like this even possible? How can you hide that much money? To get that, you have to understand the powerful legal shield that was in place, the Philippines Bank Secrecy Law, or as it's officially known, Republic Act 1405. And this law does not mess around. It establishes what it calls absolute confidentiality. That means, as a default, nobody, not you, not me, not any government office, can just peek into your bank account. And that word absolutely is so important here. It's what makes this one of the strictest bank secrecy laws on the entire planet. Now, you know, it's funny. This ironclad law actually started with a really good intention. The law itself says the goal was to build public trust in banks, to get money out from under people's mattresses and into the system, and then use those deposits to fuel economic growth. A pretty noble goal, but as we'll see, it came with some very complicated consequences. And this is where we see the two faces of the law. Because when the Estrada case actually went to court, this very same bank secrecy law produced two totally different results for the exact same person using the exact same secret account. It's wild. Okay, so check this out. It's a real legal puzzle. On the first charge for illegally using the fake name Jose Velarde, Estrada was acquitted. Why? The court said, well, using that name for a private bank transaction is protected by the bank secrecy law. But then, on the charge of plunder, basically for amassing all that ill-gotten wealth, he was convicted. Here, the court found a loophole. They said the money in that account wasn't just evidence of the crime, the money was the crime itself. So the same law both shielded him and took him down. So you have to ask, just how strong is this law when you're not a president in a massive scandal? Well, it's incredibly powerful. Think of it like a vault that's almost impossible to crack. But there are a few very specific keys that can open it. And to literally understand how high the bar is set to get one of those keys, let's step away from politics for a second and look at a case called Sibyllion versus Alda. This one shows you just how far the courts will go to protect bank secrecy, even when there's clear evidence of fraud. So in this case, a whopping 64 million pesos were fraudulently taken out of an account because of a bank system glitch. The bank employee being blamed for it all, Norlina Sabayan, just wanted to look at the other accounts where the money was allegedly moved to prove she was innocent. Seems reasonable, right? But the Supreme Court said no. Flat out no. Even with over 64 million pesos on the line, the court chose secrecy. It called the accounts privileged, which is a very strong legal term, and said they couldn't be touched without written permission from the owners. I mean, that just shows you how high that wall of secrecy really is. So, as we've seen, that vault is locked up tight, but it's not completely impenetrable. The law itself provides exactly 4 keys that can, under very specific circumstances, open it. Let's quickly walk through them. First, and this is the simplest one, is getting the depositor's own written permission. Second, there's an exception made during impeachment trials for top officials like the president. Third, a court can order an account opened, but only in very narrow cases involving bribery or dereliction of duty. And finally, number 4, this is the key they used in the Estrada plunder case, when the money itself is the subject matter of the litigation. If your situation doesn't fit into one of these 4 boxes, that vault stays sealed. So what's the big takeaway here? Well, we're left with this fundamental conflict right at the heart of Philippine law. It's a constant battle between a person's right to privacy and the public's demand for accountability. I mean, as we've seen, this law really serves 2 masters. On the one hand, it's a huge pillar of financial privacy. It builds trust in banks, and it protects regular people from having their finances exposed for no good reason. But on the other hand, it can also act as the perfect shield, making it incredibly hard to investigate corruption, money laundering, and all sorts of financial crimes. And that brings us to the final question, one that lawmakers and citizens in the Philippines are still wrestling with today. Is this ironclad law a vital pillar that protects everyone's privacy equally, or has it become a convenient shield for the powerful to hide behind? As the whole Jose Velarde saga showed us, the answer is anything but simple.
Usually when we talk about a medical diagnosis, there's this expectation of like clinical precision.
Right, exactly.
You know, you break your arm, you go to the hospital, the x-ray spits out an image with this jagged white line across your radius, and the doctor just points at the film and says, there it is.
It's broken.
Yeah, broken or not broken, it's binary, it's visible. And I think we like things to be categorized neatly like that because, well, it gives us a sense of control.
Oh, absolutely.
But then you step into a field like, say, neurodevelopment or complex trauma, and suddenly that pristine x-ray machine is just useless. You are looking at a diagnostic landscape that is entirely murky.
Yeah, it relies on intersecting symptoms, hidden histories, and a lot of subjective interpretation.
Exactly.
It forces you to just abandon the comfort of the binary.
Yeah.
You know, you're no longer looking for a single broken bone. You're trying to understand this entire reactive ecosystem where the symptoms often mask the actual root cause.
Right. And today, we are applying that exact same conceptual shift, you know, that transition from clean, visible precision to just absolute impenetrable murkiness. But we're applying it to the world of high-stakes finance and law.
Which is fascinating.
It really is. Today, we are opening a stack of sources that honestly reads like a geopolitical thriller, but Every single document, every court ruling, every stolen peso we're going to talk about is entirely real.
Yeah, we've got a really foundational collection here.
We really do. We're looking at Philippine Supreme Court decisions, the Bank Secrecy Law of 1955, the Foreign Currency Deposit Act, and a series of highly specific Bangko Sentral and Pilipinas circulars. And the mission of this deep dive into the source material is to explore this profound and frankly often explosive tension.
The tension between privacy and accountability.
Exactly. The collision between an individual's right to absolute financial privacy and the state's monumental, often really clumsy struggle to define, prosecute, and punish grand-scale corruption.
It's a tension that pretty much defines modern governance. I mean, how do you build a financial fortress strong enough to protect a citizen's life savings from, say, tyranny or government intrusion, while simultaneously ensuring that very same fortress doesn't become this sanctuary for thieves who are just stealing billions from the public treasury?
Right. And to understand how that tension snaps, we are going to look at some truly unbelievable scenarios today. I mean, we are tracking the fallout of a desperate bank teller accused of stealing a 64 million peso ATM glitch occurring all the way in Dubai.
That one is wild.
So wild. We've got a president of the republic signing bank documents under a secret alias, and the creation of this unprecedented legal weapon designed specifically to catch politicians plundering the state.
And what becomes immediately apparent in these sources is that the law is not this static list of rules written in some dusty library. It is a highly reactive, living mechanism.
It evolves.
Exactly. It evolves, sometimes decades too late, in direct response to, well, human ingenuity and human greed.
Okay, let's unpack this. Because if we are going to understand how a sitting president or, a rogue bank client manipulates the system, we have to understand the ground rules they are playing by.
Right.
And the bedrock rule in the Philippine banking system is this ironclad vault of bank secrecy.
Yeah, we really need to anchor ourselves in Republic Act number 1405. That's the Bank Secrecy Law, approved way back on September 9, 1955.
1955.
Yeah, and to understand why this law is so famously rigid, you kind of have to place yourself in the psychological and economic reality of the 1950s Philippines.
Oh, because this is a nation that's barely a decade out of the sheer devastation of World War II.
Exactly. Manila was practically leveled. The physical infrastructure was largely destroyed. The economy was incredibly fragile. And public trust in institutions was practically non-existent.
I mean, if you lived through the Japanese occupation where currency and, the Mickey Mouse money became hyperinflated and just worthless almost overnight, your instinct isn't going to be to hand your hard-earned physical cash over to a man in a suit at a newly constructed bank.
No, not at all.
Your instinct is going to be to bury it in a coffee can in the backyard or sew it into your mattress.
Precisely. The government was facing this existential crisis of liquidity. The stated policy in Section 1 of RA 1405 is actually completely transparent about this.
What does it say?
It says the state needed to give encouragement to the people to deposit their money in banking institutions and to discourage private hoarding.
Oh, wow. They literally put the anti-hoarding part right in the law.
They did. The government desperately needed that dormant cash injected into the formal banking system so it could be leveraged into authorized loans to, fund the economic and industrial development of the entire country.
Right.
But to convince this traumatized, highly skeptical populace to just hand over their wealth, the government had to offer a guarantee of privacy that bordered on the absolute.
They essentially had to create a financial confessional. I mean, the bank is the priest, and under the law, the priest absolutely cannot talk no matter who is asking.
That's a great way to put it.
Because Section 2 of the law states that all deposits of whatever nature are of an absolutely confidential nature, and this is the massive wall they built. They may not be examined, inquired, or looked into by any person, government official, bureau, or office.
Yeah, it doesn't say unless a police officer really wants to know.
Right.
It says any person or government office. They codified a guarantee of pure invisibility. Now, the law did carve out exceptions, but they were drafted to be incredibly narrow just to maintain that public trust.
So what are the exceptions? How does the vault open?
It can only be legally opened in 4 very specific scenarios. First, if the depositor gives explicit written permission.
Okay, that makes sense.
Second, in cases of formal impeachment of high officials. Third, upon the order of a competent court, but only specifically in cases of bribery or dereliction of duty of public officials.
Oh, so not just any crime, bribery and dereliction.
Right. And fourth, in cases where the money deposited is the actual literal subject matter of the litigation.
Give me an example of that last one.
So, for example, if 2 people are suing each other over who rightfully owns the specific funds sitting in account X. The court has to look at account X to resolve it.
Got it. Okay, so those are the four. And as the economy globalized, the state realized they needed to extend this armor. Because by 1972, we see the enactment of the Foreign Currency Deposit Act. That's Republic Act number 6426.
Yeah, and the context of 1972 is really vital here. The country was entering the martial law era. They were facing significant capital flight. And there was this desperate need to bolster international reserves.
They needed dollars.
Exactly. RA 6426 allowed anyone to deposit foreign currencies. And to attract that foreign capital, the state offered some intense incentives. They mandated a 100% foreign currency cover requirement.
Meaning what, exactly?
Meaning the banks had to hold the actual physical foreign currency to back up the deposits, ensuring the money was always there. They also guaranteed unrestricted withdrawal and transferability abroad, and they entirely exempted the interest on these deposits from income tax for non-residents.
Wow. But the real kicker is Section 8 of that 1972 law, right? Because it explicitly states that the secrecy of these foreign deposits shall be governed by the draconian provisions of the 1955 Bank Secrecy Law.
Yes. So the vault was essentially upgraded.
Yeah. Not only is your domestic peso account invisible, your offshore dollars are practically buried in a concrete bunker. And the penalty for a bank employee violating this was up to 5 years in prison.
5 years. I mean, it was engineered to instill absolute terror in any bank teller or branch manager who might even idly think about snooping into a client's ledger.
Right.
The state elevated the relationship of trust between the bank and the depositor above almost all other legal obligations.
But looking at this architecture, an immediate glaring vulnerability comes to mind.
Oh, yeah.
Because if this vault is completely impenetrable from the outside and the priests running the bank can never talk, how do you prevent the priests from looting the collection plate?
That's the billion peso question.
Right, because if a bank director or a major stockholder decides to take out a massive under-the-table loan from their own bank using the depositor's money, and nobody, not even a government auditor, can look at their private accounts, the state has essentially legislated the perfect environment for systemic insider corruption.
And that is the exact paradox the regulators eventually crashed into. They built a fortress so strong that the guards inside could operate with total impunity.
Wow.
And it took decades for the state to formally address this vulnerability, which brings us to a really critical regulatory adjustment in our sources. Bangko Sentral de Pilipinas Circular number 170.
And that was issued in 1998, right?
Yes, 1998.
So it took from 1955 to 1998 for the central bank to realize they needed a skeleton key for their own gatekeepers. What exactly did this circular mandate?
So it engineered a highly specific mandatory waiver of that absolute bank secrecy. The BSP decreed that if a bank director, officer, stockholder, or any related interest, what they call DOS or I, borrows more than 5% of the bank's capital and surplus from their own institution, they are legally required to waive the secrecy of their deposits.
Okay.
But here's the catch. It doesn't just apply to the bank they are borrowing from. They must waive the secrecy of their deposits of whatever nature in all banks in the Philippines.
Wait. Across the board, that is an astonishingly broad condition. If you want to borrow heavily from the bank you run, you have to strip yourself of financial privacy across the entire archipelago, every single account, everywhere.
Every single one. And the circular was drafted meticulously to prevent executives from simply using shell companies or relatives to bypass the rule.
How so?
It defines same interest aggressively. It loops in the executive spouse, relatives within the first degree of consanguinity or affinity, partnerships where they act as a general partner, properties they co-own, and any corporation where they hold more than 20% of the subscribed capital.
Let me get this straight. So if I am the vice president of Bank A, and my husband owns a logistics company that takes out a massive loan from Bank B, and both Bank A and Bank B are owned by the same parent holding company, I am forced to waive my right to secrecy across the entire Philippine banking system.
Yes, you are.
That is wild. The state is essentially saying you are granted the extreme privilege of managing the public's money, but the moment you leverage that position for massive personal enrichment, you forfeit the shield of secrecy entirely.
Exactly. It's a fascinating attempt at regulatory equilibrium. The state is trying to police the apex predators of the financial system without shattering the trust of the everyday depositor.
But here is where theory slams into messy human reality.
It always does.
Because a law drafted in 1955 with the noble intention of protecting everyday citizens from government overreach can create bizarre, Kafkaesque nightmares in modern, localized disputes.
Oh, absolutely.
What happens when that absolute shield of secrecy is weaponized? What happens when it is used to legally blindfold someone who is desperately trying to prove their innocence? To see the 1955 bank secrecy law in action today, we are looking at a modern banking dispute that spiraled completely out of control. We're talking about the 2018 Supreme Court case of Sabayan v. Alda.
This case is a masterclass in how rigid statutory formalism can just paralyze the search for the truth in a corporate setting.
The facts here are wild. We start with a woman named Elizabeth Alda. She is a client at a Banco de Oro, or BDO, branch in San Fernando, La Union. She files a formal complaint with the Office of Special Investigation of the Banco Central named Filipinas. Her target is the assistant manager of that branch, a woman named Norlina Subayan. Now, Elizabeth's complaint is not a minor grievance. She alleges that her savings account, which held a very healthy balance of over 1,071,000 pesos in July 2008, was inexplicably drained down to a laughable 334 pesos by October.
Wow.
Over 1 million pesos simply vaporized.
And she explicitly denies making any withdrawals that would account for that missing million. But her complaint goes further. She also alleges that she deposited 2 distinct managers' checks totaling nearly 5 million pesos, and those funds were never credited to her account.
And we should clarify for you, the listener, what a manager's check is in this context, specifically a crossed manager's check.
Right, that's important.
A standard check can be cashed over the counter, but when a check is crossed, literally drawn with 2 parallel lines across the top left corner, it means it can only be deposited directly into a bank account. It leaves an indelible paper trail. You can't just take the cash and walk away.
No, you can't.
Elizabeth claims she deposited a crossed check from United Coconut Planters Bank for roughly $3 million, and another from Bank of the Philippine Islands for roughly $1.9 million. These checks were issued by her relatives, Ferdinand and Jovelyn. Elizabeth points at the paper trail and accuses the branch manager, Norlina, of unauthorized deductions and outright theft.
Right. And if you are an auditor looking solely at Elizabeth's complaint, it looks like a textbook case of a rogue mid-level bank employee quietly siphoning funds from an unaware client.
Yeah, it looks bad for Norlina.
But when Norlina files her defense, she doesn't just deny the theft. She reveals this sprawling, multinational financial disaster.
Oh, this is the part that blew my mind. Norlina says Elizabeth's complaint is nothing but retaliatory harassment. Why? Because BDO, the bank itself, had already filed a massive criminal case against Elizabeth, her daughter Ruby, and several cohorts for estafa, which is the Philippine criminal charge for fraud and swindling, and for violating the Access Devices Regulation Act.
Yeah, and the catalyst for this entire war was a monumental IT failure.
Tell me about it.
So, in May 2007, BDO merged with Equitable PCI Bank. Merging the digital infrastructure of 2 massive financial institutions is notoriously perilous. BDO absorbed all of Equitable's accounts, including this specific product called the Visa Electron Fast Card.
Okay, so Elizabeth had previously opened one of these fast cards in the name of her daughter, Ruby. Now, Elizabeth was working in Taiwan, and Ruby was living in Dubai.
Right.
The fast card was designed to allow Ruby to withdraw funds from any ATM overseas that carried the Visa Plus logo. The mother remits money in the Philippines, the daughter withdraws dirhams in Dubai. Simple.
Except the system merger failed to properly synchronize. Due to this asynchronous lag between the overseas APM network and the newly merged BDO mainframe in Manila, the system stopped checking the actual balance of Ruby's account in real time.
It effectively removed the withdrawal limit.
Completely.
Yeah.
Ruby allegedly realized that she could walk up to an ATM in Dubai, insert her fast card, and the machine would dispense cash regardless of whether she actually had funds in the account.
That is insane.
According to the internal BDO investigation cited in the court records, from November 2007 to September 2008, Ruby allegedly exploited this offline glitch to withdraw an incomprehensible sum, 64,229,297 pesos and 50 centavos.
Wait. Over 64 million pesos from an ATM glitch.
Yes, it is a staggering exploitation of a digital blind spot. And the paper trail showed that her mother, Elizabeth, had only officially remitted about 1.6 million pesos to that account over its lifetime.
So you have a 64 million peso hole in the bank's ledger. BDO's investigation alleged that Ruby didn't just keep the cash in Dubai. She allegedly utilized the glitch to launder the money, transferring these massive phantom funds from her fast card back into various bank accounts in the Philippines, funneling it to her mother, Elizabeth, and to relatives, including Ferdinand and Jovelyn.
And when BDO inevitably discovered the gaping hole in their balance sheet, they confronted the family. The court documents actually indicate that Ruby went to the Philippine consulate in Dubai and formally executed legal documents, admitting to the debt and ceding certain properties and bank accounts back to BDO in a desperate attempt to pay off the 64 million pesos.
And this brings us back to Norlina, the accused branch manager in La Union. She wasn't stealing Elizabeth's money.
No, not at all.
She was acting as the instrument of the bank's recovery protocol. BDO debited Elizabeth's savings account, clawing back the missing million pesos, and they intercepted and applied the proceeds of those two managers' checks from Ferdinand and Jovelyn to offset Ruby's massive fraudulent debt. Norlina was simply doing her job, recovering stolen funds based on Ruby's consular admission.
But the bureaucratic machinery had already been set in motion by Elizabeth's initial complaint. The Office of Special Investigation of the BSP reviewed the initial paperwork and found a prima facie case against Norlina.
And just to clarify, prima facie basically means at first glance. The investigators looked at the surface-level documents. Money was there, then it wasn't. Checks were deposited but not credited, and decided there was enough smoke to warrant formally charging Norlina with conducting business in an unsafe or unsound manner.
Right, which is an administrative charge that could permanently blacklist her from the banking industry.
Norlina finds herself fighting for her professional survival. She knows she is innocent, but to prove it to the BSP tribunal, she needs to expose the entire laundering network. She needs to prove that those managers' checks weren't legitimate deposits, but were actually the laundered proceeds of the Dubai glitch being funneled back into BDO.
So her lawyers filed two really aggressive legal motions. First, they demand written interrogatories. They want Elizabeth, Ferdinand, and Jovelyn placed under oath to answer highly specific questions about where a sudden 5 million pesos came from. Second, and more importantly, they file a motion for production of documents. Norlina formally requests the BFP to order the other banks, UCPB and BPI, to hand over the complete bank statements for the accounts under the names of the relatives Ferdinand and Jovelyn.
Because Norlina's entire defense hinges on proving that Ruby was the actual beneficial owner of those accounts and was using her relatives as dummy accounts to hide the 64 million pesos.
Exactly. And here is where the legal system acts like a brick wall. What's fascinating here is the BSP denies her request for the documents. She appeals to the Court of Appeals. They deny her request. She elevates it all the way to the Supreme Court of the Philippines, and the Supreme Court denies her request.
I mean, if you are listening to this, your sense of justice is probably screaming right now. Isn't it unfair that an employee fighting for her career is denied access to the exact documents that could prove her innocence? If she identifies the exact bank statements that will prove she was thwarting a fraud ring rather than committing theft, how can the highest court tell her she isn't allowed to see them?
It feels fundamentally unjust. But the Supreme Court's refusal is anchored in two distinct, immovable pillars of Philippine law. The first pillar is the procedural nature of the venue.
Meaning where the trial is happening?
Exactly. Norlina was not fighting a criminal charge in a trial court. She was fighting an administrative charge before the BSP. And administrative proceedings operate under entirely different philosophical rules.
Because we hear the term due process thrown around a lot. We assume it means everyone gets their day in court with a judge banging a gavel, lawyers shouting objection, and surprise subpoenas forcing people to hand over dramatic evidence. Full Hollywood-style courtroom drama.
Right. We expect judicial due process. But the Supreme Court explicitly clarified that administrative due process cannot be fully equated with due process in its strict judicial sense. Administrative bodies like the BSP are designed to regulate their industries quickly and efficiently. Their proceedings are summary in nature.
So they're supposed to be fast?
Yes. The goal is an expeditious resolution without getting bogged down in the strict hyper-technical rules of evidence that govern a criminal trial.
So the court is essentially saying, if we let you drag UCPB and BPI into this and we force everyone into months of depositions and document discovery, we are turning a fast administrative review into a multi-year judicial circus.
Exactly. In administrative law, due process merely means you are given the opportunity to be heard. Norlina was allowed to submit her affidavit explaining the Dubai glitch. She wasn't silenced, but the tribunal wasn't going to utilize the power of the state to pry open third-party vaults just to corroborate her defense.
Wow. Okay, and that brings us to the second, even more formidable pillar blocking Norlina. Republic Act number 1405, the bank secrecy law strikes again.
It does.
But wait, didn't Norlina's lawyers have a counter for this? Because they pointed out that Ruby had gone to the Philippine consulate in Dubai and formally executed documents authorizing BDO to access her accounts to settle the debt. If the depositor gives written permission, the vault opens. That's one of the 4 exceptions we talked about.
It is an exception. But the Supreme Court looked at the strict, formalist reality of the paperwork. The accounts at UCPB and BPI that Norlina wanted to pry open were not registered under the name Ruby. On paper, the UCTB account belonged entirely to Ferdinand. The BPI account belonged entirely to Jovelyn.
I see the trap. Norlina is arguing that Ruby is the beneficial owner, the mastermind moving the pieces. But the 1955 law doesn't care about beneficial ownership or grand theories of money laundering. It only cares about the name printed on the ledger.
Precisely. The court ruled that Ruby's written authorization to open her own accounts cannot legally be stretched to pry open accounts officially registered to Ferdinand and Jovelyn. To the law, Ferdinand and Jovelyn are distinct, private citizens who possess an absolute statutory right to financial secrecy. Unless Ferdinand and Jovelyn explicitly waive their rights, or unless a competent court orders the accounts opened in a specific case of a public official's bribery, which this wasn't, those accounts remain hermetically sealed.
It is a stunning realization. A law designed in the 1950s to protect the savings of traumatized citizens was successfully utilized as an impenetrable shield by individuals accused of running a massive digital money laundering operation. And it successfully blocked a desperate bank teller from acquiring the evidence she needed to clear her name. The rigidity of the privacy law actively paralyzed the search for truth.
It perfectly illustrates the friction of a legal system trying to apply mid-century paper rules to 21st century digital crime.
And if the bank secrecy law can create that much chaos in a corporate dispute over an ATM glitch, what happens when the person hiding behind that absolute secrecy isn't a relative or rogue bank client, but the president of the republic?
Oh, this is where it scales up dramatically.
Yeah, we are transitioning from a 64 million peso corporate headache to a 500 million peso constitutional crisis. We are diving into the 2009 Supreme Court decision, People v. Estrada.
This is the jurisprudence surrounding the infamous Jose Velarde account. The context here is explosive. The allegation, which formed the bedrock of a massive national scandal, was that on February 4, 2000, the sitting president of the Philippines, Joseph Ejercito Estrada, walked into a branch of Equitable PCI Bank in Binondo, Manila.
The allegation is that he sat down with bank officials and signed documents to open trust account No. C-163. He allegedly deposited 500 million pesos into this trust, which was then immediately routed as a loan to a prominent businessman named William Gatchalian, who was widely known at the time as the Plastics King.
Now, the specific criminal charge we are examining in this case, criminal case number 26565, was not focused on where the 500 million pesos came from. That was handled in separate plunder proceedings. This specific charge was laser focused on how he opened the account.
Right.
The state alleged that he did not sign his real name. He signed the bank documents using the alias Jose Velarde.
So the prosecution charged him with violating Commonwealth Act number 142, commonly known as the anti-alias law. The logic of this law is pretty straightforward. It was enacted to prevent fraud and chaos. Before the era of biometric databases and digital IDs, your name was your primary anchor of identity in the commercial world. The law dictates that you cannot use a name other than your real name or your duly authorized baptismal name in public and business transactions without explicit judicial authority.
And the prosecution's argument was simple. The president of the Philippines engaged in a massive commercial transaction, opening a $500 million peso trust account, and he deliberately signed a fictitious name to hide his involvement. It seems like an open and shut violation of the anti-alias law.
It really does. And yet here's where it gets really interesting. Despite overwhelming evidence and testimony that he did, in fact, physically sign the name Jose Velarde on those bank documents, the Supreme Court ultimately acquitted him of this specific charge. When you read the ruling, it feels like a magic trick. How did the highest court justify that acquittal?
They dismantled the prosecution's case by applying a hyper-strict interpretation of the legal definition of an alias, relying heavily on a precedent known as the Ursua ruling. The Ursua doctrine establishes that for the use of an alias to actually be a crime, the state must prove two distinct elements. The use of the fake name must be public, and it must be habitual.
Okay, let's break those down, starting with public. The prosecution points out that he sat in a room and signed documents to move 500 million pesos in a major commercial bank. How can the defense possibly argue that wasn't a public use of the name?
Well, the prosecution tried to import a concept from libel law. In libel, if you write a defamatory letter and show it to even one single third party, the law considers that publication.
Okay.
The prosecution argued that because there were other people in the room when Estrada signed the documents, the act was inherently public.
Who exactly was in the room?
The records show he signed the documents in the presence of 4 individuals. 2 high-ranking bank officers, Clarissa Ocampo and Manuel Curado, and 2 private associates from the president's strict inner circle, Aparicio Lacuin and Fernando Chua.
So 4 witnesses. Under normal circumstances, if I show a fake ID to 4 different people, I am publicly using a fake name.
But the Supreme Court rejected the libel analogy entirely. They stated that a penal statute, a law that actually puts people in prison, must be construed strictly against the state and liberally in favor of the accused. You cannot borrow definitions from civil libel law to put a man in jail. And more profoundly, the court brought down the absolute hammer of Republic Act 1405.
The bank secrecy law acts as an invisibility cloak again.
Exactly. The court analyzed the environment of the room. A trust account is a banking transaction. Therefore, the moment that account was opened, it was instantly shrouded in the absolute statutory confidentiality of RA 1405. The bank officers, Ocampo and Curado, were not members of the general public. They were bound by law under threat of imprisonment to never breathe a word of what happened in that room.
And the other 2 men were a trusted chief of staff and a lawyer friend.
Right.
The court essentially ruled that you cannot have a public use of a name in a setting that the state itself has legislated to be absolutely secret. It's the legal equivalent of the tree falling in an empty forest defense. If you use a fake name in a vault where the law expressly forbids anyone from looking, did you really use it publicly? The Supreme Court ruled that you did not. The intent to be known to the general public by the name Jose Velarde was entirely absent.
It is a brilliant, entirely logical, and deeply frustrating application of the law. The Bank Secrecy Act didn't just prevent the discovery of evidence, as we saw in the bank teller's case. Here, it actually erased an essential element of a completely different crime.
So the prosecution fails the public test. But what about the habitual test? The Ursua ruling requires the use to be public and habitual. Surely, opening a massive trust account, depositing funds, and initiating loans constitutes habitual business use, right?
You would assume so, but the defense found a fatal flaw in the actual grammar of the information.
The information is the formal charging document filed by the state, outlining exactly what crime was committed and when. Are you saying a $500 million peso presidential corruption case was derailed by syntax?
Words are the absolute boundary lines of the law. The information filed by the prosecution alleged that the accused used the alias on or about 04 February 2000, or sometime prior or subsequent thereto.
To a layperson, that just sounds like standard lawyer speak. They are saying it happened around February 4th, maybe a little before, maybe a little after. They're just covering their bases because memory is imperfect.
That was the prosecution's defense of the phrasing. They argued that sometime prior or subsequent thereto was meant to imply that he used the alias on multiple distinct occasions over a period of time. But the Supreme Court subjected that sentence to rigorous grammatical analysis. They zeroed in on the use of the disjunctive word or.
The word or.
Yes, or. The court ruled that grammatically, the phrasing on or about, or sometime prior, or subsequent, refers back to a single approximate event. It means the crime happened on date A, or maybe date B, or maybe date C. It does not mean it happened on date A and date B and date C.
Wow. Because they used the disjunctive or instead of the conjunctive and, the court ruled that the state only formally charged him with a single instance of using the alias. And a single instance, by pure dictionary definition, cannot be habitual.
It really highlights the extreme precision required in penal law. The Constitution guarantees the accused the right to be fully informed of the exact nature of the accusation against them so they can prepare an adequate defense. If the grammar of the charge implies a single isolated event, the defense team only prepares to defend a single event. To allow the prosecution to suddenly claim during the trial that the grammatical phrasing actually meant a vast, habitual pattern of behavior would be a trial by ambush. It would violate the constitutional right to due process.
So because the bank vault was secret, it wasn't public. And because the prosecution used the word or, it wasn't habitual. Estrada is fully acquitted of the illegal use of an alias. But zooming out from the legal mechanics, this ruling exposes a terrifying reality about the system at that time. The Supreme Court noted in their decision that before the passage of the Anti-Money Laundering Act of 2001, which was RA 9160, opening anonymous numbered accounts or accounts under pseudonyms, was actually a completely legal, accepted banking practice in the Philippines.
Right. It was a massive systemic loophole. The wealthy and the powerful could legally hide their assets behind fake names, and the bank secrecy law ensured no one could ever investigate those names. But because of the constitutional ban on ex post facto laws, you cannot punish someone using a law passed after the act was committed. So RA 9160 couldn't be retroactively applied to Estrada.
The state realized they were fighting a modern, multi-layered war of financial attrition using archaic weapons. The anti-alias law was defeated by grammar. Traditional graft and corruption laws like malversation or direct bribery were too piecemeal. They required the state to prove a specific quid pro quo for every single envelope of cash. When you are dealing with a systemic syndicate using dummy corporations, offshore accounts, and intermediaries, proving those isolated individual transactions beyond a reasonable doubt is nearly impossible.
The state realized that prosecuting grand corruption transaction by transaction was like trying to empty the ocean with a teaspoon. They needed a legal framework that didn't just target the individual drops of water, but targeted the entire ocean of ill-gotten wealth simultaneously.
The state needed a bigger, sharper sword. And that leads us directly to the creation and the ultimate constitutional stress test of the plunder law. We are examining the 2001 Supreme Court landmark case, Estrada v. Sandigan-Bayan. And just as a quick note to you listening, we are going to impartially report the arguments of both the majority and the dissenting justices here without endorsing either side, simply to convey the profound legal philosophies at play in these source materials.
Absolutely. So, Congress passed Republic Act number 7080, which was later amended by RA 7659, formally defining and penalizing this brand new crime, plunder.
Plunder is a visceral word. It evokes images of pirates or conquering armies stripping a city bare. How did the legislature define it in a modern statutory sense?
The statute defines plunder as the act of a public officer who amasses, accumulates, or acquires ill-gotten wealth of at least 50 million pesos through a combination or series of overt or criminal acts. And to ensure the law had teeth, the legislature attached the most severe penalty available, reclusion perpetua to death.
And reclusion perpetua is often translated simply as life imprisonment. But in the Philippine Penal Code, it's a specific, heavy classification carrying 20 to 40 years of permanent incarceration before any possibility of pardon, carrying with it accessory penalties like absolute perpetual disqualification from holding office. And at the time this case was being debated, the death penalty was still active. They were signaling that systemic corruption was an offense tantamount to treason or murder.
But whenever the state creates a legal weapon of this magnitude, a law that broad, carrying the death penalty, it is guaranteed to face immediate constitutional resistance. Former President Estrada's elite legal team challenged the plunder law directly before the Supreme Court, seeking to have it struck down as fundamentally unconstitutional.
Their defense was a multi-pronged assault on the text of the law itself. They claimed it was vague, that it was overbroad, that it dangerously lowered the standard of proof required for a criminal conviction, and that it essentially removed the necessity of proving criminal intent, or mens rea. I want to break these arguments down carefully.
Let's begin with the accusation of vagueness. The defense zeroed in on the core operational phrases of the law: combination, series, and pattern. They argued that these terms were not given precise mathematical definitions in the statute. If a man is facing a lethal injection, he has an absolute constitutional right to know exactly what specific actions constitute a combination that triggers the death penalty.
How did the majority of the Supreme Court respond to that?
The majority took a pragmatic approach. They looked to plain dictionary definitions of the words and the recorded legislative deliberations. They ruled that a combination simply means at least two different acts listed in the law. For instance, a public official combining an act of receiving a bribe with an act of illegally conveying state assets.
Okay, and a series.
A series means a repetition of the same act. For example, misappropriating public funds on 3 separate occasions. The majority argued that words of common usage do not need hyper-technical statutory definitions to be understood by individuals of ordinary intelligence.
But the defense pressed harder on the standard of proof. They pointed to a highly controversial section of the Plunder Law, Section 4. This section states that to secure a conviction, it is not necessary to prove each and every criminal act done by the accused. But it is sufficient for the prosecution to establish a pattern of overt or criminal acts. The defense argued this was blatantly unconstitutional. If I am accused of 50 distinct acts of bribery, but the state only has to prove a pattern, doesn't that mean the state is legally permitted to skip the beyond a reasonable doubt standard for the majority of the accusations?
It is a profound legal question. Does a pattern lower the burden of proof? The majority vehemently denied this. They ruled that Section 4 is merely a procedural rule of evidence, not a substantive element that lowers the burden.
How does that work in practice?
Their logic was this. If the information alleges a web of 50 corrupt transactions, the state is not forced to prove all 50 to secure a plunder conviction. However, if the state chooses to focus on, say, 3 specific transactions to establish the required pattern of amassing 50 million pesos, the state must still prove each of those 3 specific acts beyond a reasonable doubt. The standard of proof remains absolute for the acts relied upon for the conviction.
The defense also argued that by lumping all these disparate crimes together under the umbrella of plunder, the state was turning corruption into a malum prohibitum offense. In law, malum prohibitum means an act is wrong simply because a statute prohibits it, like driving on the wrong side of the road. Intent doesn't matter. If you do it, you are guilty. Contrast that with malum in se, acts that are inherently morally wrong, like murder or theft, where the state must prove mens rea, the evil intent of the perpetrator.
And the majority shut that argument down immediately. They ruled unequivocally that plunder is malum in se. The predicate acts that make up plunder, bribery, extortion, malversation of public funds are all inherently immoral and evil. Therefore, the state cannot simply show a paper trail. They must prove beyond a reasonable doubt that the accused possessed the mens rea, the willful, deliberate, and intentional design to amass ill-gotten wealth. So, with those arguments settled, the majority upheld the plunder law.
Yes, the weapon was deemed constitutional.
But the ruling was not unanimous, and I want to push back using Justice Kapunan's vigorous dissenting opinion. While the majority saw a necessary weapon against corruption, the dissent saw a vaguely worded law that handed terrifying unchecked power to prosecutors.
Justice Kapunan's dissent attacked the majority's reliance on dictionary definitions. He argued that defining combination merely as any 2 acts listed in the statute could lead to absurd and tyrannical results.
He practically game theoried how the law could be abused. Let's look at his hypothetical. The plunder law includes establishing a monopoly as one of the overt acts. Now, holding a monopoly in a specific industry is not inherently a criminal act under all circumstances. Another act listed in the law is receiving a gift. Also, not inherently criminal if there is no corrupt favor attached. But the dissent argued that under the vague wording of the plunder law, a politically motivated prosecutor could theoretically take those 2 legally innocent acts, holding a monopoly and receiving a gift, combine them, claim they resulted in 50 million pesos of wealth, and suddenly demand the death penalty.
Right. Justice Kapunan argued that a law that allows for such arbitrary oppressive combinations is fundamentally void for vagueness. Furthermore, the dissent delivered a devastating critique of the word pattern by comparing it to the United States' I.O. laws, the Racketeer Influenced and Corrupt Organizations Act, famously used to dismantle the mafia.
Oh, that's a great comparison.
The dissent pointed out that while a RICO also relies on establishing a pattern of racketeering activity, the U.S. Congress meticulously defined exactly what a pattern is in the statute itself. RICO requires the state to prove both relationship and continuity between the predicate acts.
But the Philippine legislature didn't do that. They just threw the word pattern into the plunder law and left it up to the courts to figure out what it meant.
Exactly. The dissent argued that by failing to provide a clear statutory definition of pattern, the legislature abdicated its duty and handed unfettered, arbitrary discretion to the prosecutors. What looks like a cohesive pattern to one judge might look like completely isolated, unrelated events to another. When the penalty on the table is lethal injection, you cannot leave the definition of the crime to subjective interpretation. The dissent believed this lack of explicit binding standards violated the right to due process.
This raises an important question for you, the listener. How much precision should we demand from our laws? If a law is too precise, criminals find loopholes. If it's too broad, innocent people might be swept up in a political witch hunt. Do you want a legal net with holes so small it catches every corrupt politician, even if it risks ensnaring an innocent person? Or do you want a net with wide, meticulously defined holes that protects the innocent, even if it allows the smartest thieves to slip through?
Well, the Supreme Court made its choice. The plunder law survived. The net was cast.
Having explored the theoretical constitutionality of the plunder law, we're moving to see how this immense legal weapon was wielded against an individual fleeing its reach. We are examining the 2016 case, de Chavez v. Ombudsman.
This case moves us away from constitutional theory and into the gritty logistics of a decade-long manhunt.
To understand the sheer scale of the plunder charge we are dealing with here, let's look at the staggering financial mechanics alleged in the complaints. Multiple private organizations filed consolidated complaints alleging President Estrada pressured the GSIS and SSS into buying 1.85 billion pesos worth of Bell Corporation shares.
We are talking about the forced injection of public pension funds into a targeted stock.
And the alleged kickback was massive. It was 189.7 million pesos issued via check by Belcor's Willie and Ushir, and he allegedly handed it to an intermediary, Jamie DeChavez.
And this is where the paper trails converge. According to the state, DeChavez took that check and deposited it directly into the Jose Velarde account, the Web Connects.
Right. But when the original information was filed in 2001, Jamie DeChavez was not named directly. He was charged simply as a John Doe, because as the impeachment and EDSA 2 unfolded in 2000 and 2001, DeChavez fled the country to China.
He vanished. And by vanishing, he successfully averted the initial wave of arrests. The massive plunder trial against Estrada proceeded for years without him. Estrada was convicted in 2007 and subsequently pardoned. But the case against the John Doe, against Jamie DeChavez, remained open in the Santa Gabaya and the anti-graft court.
Fast forward a full decade, it's November 2010, DeChavez finally resurfaces in the Philippines, and he demands a preliminary investigation, claiming his rights were violated because he never got to cross-examine witnesses like Urquhart during the original trials. He's saying, I wasn't here, I didn't get to question my accuser, so you can't use this evidence against me.
His legal argument sounds compelling, but the Ombudsman and the Supreme Court rejected it entirely because he fundamentally misunderstood the nature of a preliminary investigation.
Right, a preliminary investigation isn't a trial.
Exactly. Its sole purpose is to establish probable cause, a well-grounded belief that a crime was committed, not to prove guilt beyond a reasonable doubt. Therefore, a suspect does not have a constitutional right to confront and cross-examine accusers during a preliminary investigation. That right only triggers during the actual trial.
So what does this all mean? It means decisions have consequences. DeChavez chose to flee. By averting his arrest and disappearing to China, he forfeited his opportunity to cross-examine the witnesses at the time. He cannot blame the Ombudsman a decade later for the consequences of his own flight.
And another critical point, the Ombudsman is an independent constitutional body. The courts practice non-interference with the Ombudsman's executive function of finding probable cause, deferring to their judgment unless there is a blatant abuse of discretion. They have the cleared checks, the bank records, and the sworn testimonies. That was more than enough.
So let's recap this incredible journey. We went from the absolute shield of the 1955 bank secrecy law that frustrated a desperate bank teller and protected a presidential alias, to the creation of the plunder law as the ultimate sword against systemic corruption, and finally the procedural realities of hunting down fugitives under these heavy statutes.
If we connect this to the bigger picture, it shows that the law is a living organism, constantly struggling to balance the sacred right to personal privacy against the devastating societal impact of stolen public funds.
Exactly. And I want to leave you, the listener, with a final provocative thought to mull over. Today, we've looked at paper trails, physical bank branches, and managers' checks. But as we move deeper into an era of decentralized finance, cryptocurrencies, and offshore digital havens, will laws like the 1955 Bank Secrecy Act and the 1991 Plunder Law even be relevant? Are we trying to fight 21st century algorithm-driven corruption with 20th century legal weapons? Think about that the next time you tap your card or check your balance.
It's a terrifying thought, really.
It is. Thank you for joining this deep dive into the source material. Keep questioning the systems that govern your world.
Welcome to the debate. So imagine being charged with a crime that carries, well, the absolute maximum penalties a state can impose.
Right, we're talking life in prison or even death.
Exactly. But instead of the prosecution having to meticulously prove, every single thing you supposedly did, the state is legally allowed to take shortcuts. They don't have to prove every individual act.
Which is terrifying, and worse, when you try to mount your defense, you weren't allowed to cross-examine key witnesses or even see the bank records that could prove your innocence.
Yeah. Sounds like the plot of a dystopian novel, right?
It really does. I mean, it sounds like a system where the conclusion is just already written before the trial even begins.
But in the realm of grand-scale political corruption, this isn't fiction. This is a very real, fiercely contested legal framework. Today, we're examining the profound tension between state prosecutorial power and individual due process within the Philippine legal system.
Right.
Specifically, we're looking at the anti-plunder law, which is Republic Act No. 7080, alongside the procedural rules that govern preliminary and administrative investigations.
And the core of what we're debating today is really a fundamental question of balance. I mean, when a nation is facing the systemic multi-billion peso looting of its own treasury, does the current legal framework provide a necessary and, robust mechanism to combat that level of sophisticated fraud? Or, in its rush to punish the powerful, does it sacrifice fundamental constitutional rights, like clarity in what actually constitutes a crime, and the right of the accused to, meaningfully defend themselves?
To explore this, we're drawing from a really fascinating collection of Philippine Supreme Court rulings that truly stress test these concepts. We'll be looking at Estrada v. Sandigan Bayan, which challenged the very constitutionality of the plunder law itself.
A huge case.
Massive. We'll also dive into Decaves v. Ombudsman and Siban v. Alda, which deal with how these investigations are actually conducted on the ground. And finally, People v. Estrada, which looks at the incredibly opaque wall of bank secrecy.
And, these aren't just abstract legal theories. These cases involve ousted presidents, billions in state pension funds, and ordinary bank officers just caught in the crossfire.
Exactly. Now, to just lay out our perspectives clearly, I represent the position that the statutory definitions and summary procedural rules within this Philippine framework are not only highly effective, but constitutionally sound. They provide comprehensible standards and the fairness necessary to prevent the sheer frustration of justice.
Right.
The state simply must have flexible, powerful tools to prosecute grand-scale crimes effectively.
Well, I come at it from a very different way. I argue that these laws suffer from dangerous structural vagueness. Furthermore, the summary procedures used to enforce them, they systematically strip the accused of vital defensive tools when their very life and liberty are at stake. You just cannot sacrifice the architecture of justice because the crime is large.
Let me ground my perspective for a moment here. When we talk about this legal framework's approach to grand corruption, we have to look at what it's actually up against.
Okay.
The plunder law, RA 7080, targets individuals who amass ill-gotten wealth of at least 15 million pesos. That is not petty theft.
No, it's not.
So to prosecute at that scale, the law uses language that gives a sufficiently definite warning to anyone of common intelligence. It targets a combination or a series of overt criminal acts. Those aren't mysterious legal terms, They have clear, ordinary meaning supported by legislative intent.
But ordinary meaning just isn't enough when the penalty is reclusion perpetua, which is life imprisonment.
I hear that. But we also have to look at the procedural side. The limitations we see in administrative and preliminary investigations, like denying full discovery or cross-examination early on, those are not violations of due process.
How so?
Because these proceedings are inherently summary. They're meant to be quick. Due process at this initial stage only guarantees the opportunity to be heard, not an exhaustive, full-blown display of evidence before a trial even begins. This system works because it balances the rights of the accused with the state's absolute mandate to pursue justice against incredibly powerful, well-resourced individuals.
But the scales aren't balanced. They are impermissibly tilted. Let's look at the plunder law itself. It lacks explicit statutory definitions for its most essential elements, specifically the concept of a pattern of criminal acts.
Well, pattern is...
This leaves the line between an isolated bailable crime and the non-bailable capital offense of plunder entirely up to guesswork and arbitrary enforcement by prosecutors.
But the pattern?
And procedurally, due process is being steadily eroded under the guise of what the state calls summary expediency. When the system denies an accused bank officer the right to access bank documents to prove her innocence, or denies an accused plunderer the right to confront key witnesses building a capital case against him, it fundamentally kneecaps the defense. You cannot take shortcuts when a person's life is on the line.
Okay, if I'm listening to this, I'm probably wondering how a law that carries a life sentence could possibly be vague. So before someone can defend themselves, they must understand exactly what they're charged with. Let's start with the substantive clarity of the plunder law, specifically Section 1.
All right.
The defense in these cases often claims RA 7080 is vague, but if we actually read the text and the legislative record, the clarity is, I'd say, mathematically precise. The law requires the amassing of at least 50 million pesos through a combination or series of acts.
Right. Those words again.
Yes. And the statute clearly defines combination as at least 2 different acts from an enumerated list. For example, if a public official commits misappropriation of funds and combines that with receiving illegal payoffs, 2 different acts.
Okay.
Series, on the other hand, just means a repetition of the exact same act. So the 50 million peso threshold is defined, the specific acts are defined, the statute gives fair warning.
I'm sorry, but I just don't buy that. Let me tell you why. You are simplifying terms that quite literally carry the weight of a life sentence. You mention combination and series, but you're conveniently skipping over Section 4 of the law.
I'm not skipping it, it's just...
Section 4 requires the prosecution to prove a pattern of overt or criminal acts indicative of the overall unlawful scheme or conspiracy. Pattern is an essential substantive element of the crime of plunder, yet pattern is completely undefined in the statute.
But the pattern is built out of the combination and series.
Is it? Let's lean heavily on Justice Capunan's brilliant dissenting arguments regarding this exact issue in Estrada v. Sandiganbayan. If the law doesn't define what makes a pattern, what actually connects the acts?
Well, the intent to...
Is it the specific victims, the method? Let's use an analogy. Think of this alleged pattern as a bicycle wheel. The predicate acts, the bribery, the embezzlement, those are the spokes. But the law doesn't define the rim holding them together.
Okay, I see where you're going.
Right? If you only have 2 disjointed spokes, say one instance of bribery in 1998 and one instance of misappropriation in 2000, how does that function as a wheel? It doesn't. Because the law refuses to define the rim, it leaves trial judges and prosecutors to just, well, guess what actually connects these isolated acts into a cohesive scheme? It's structurally deficient.
That's an interesting point, though. I would frame it differently. The pattern isn't some separate nebulous requirement that exists in a vacuum. It is a natural, unavoidable byproduct of proving the combination or series of predicate acts.
A byproduct?
Yes. Let's step away from the wheel analogy and look at the sheer reality of grant corruption. If a public official executes 50 separate orchestrated raids on the public treasury using dummy corporations, you don't need a standalone dictionary definition of pattern in the statute to understand what's happening.
But you still need a legal standard.
The pattern is self-evident in the scheme to amass that 50 million pesos. The prosecution is proving the acts themselves, and the pattern emerges organically from the evidence of those acts. It isn't guesswork by a judge, it's logical deduction based on proven hard evidence.
A logical deduction by whom? When the law lacks tight parameters, logical deduction is just a polite term for prosecutorial discretion. And if the state is allowed to be vague about the pattern of the crime, how does that actually impact the burden of proof?
They still have to prove it.
This brings us to an even more alarming issue, mens rea, which is criminal intent. Section 4 of the plunder law dangerously lowers the quantum of evidence required by the state.
How so? The state still has to prove the crimes beyond a reasonable doubt.
It explicitly states in Section 4 that to establish the pattern, it isn't necessary for the prosecution to prove each and every criminal act done by the accused. Think about the implications of that.
It's an efficiency measure.
By legally allowing the state to skip proving every act, the law effectively eliminates the requirement to prove criminal intent for those component crimes. Just to ground that for our listeners, traditional crimes like murder, or in this case, malversation of public funds, are mala and se.
Right. Inherently wrong.
Yes. That means they're inherently wrong, and the state absolutely must prove that you had the specific criminal intent to commit them. But plunder takes these traditional mala in se crimes and converts them into a bizarre hybrid. It treats them almost like mala prohibida offenses.
Like a traffic violation?
Exactly, like a parking ticket, where intent doesn't matter, it just matters that it happened. By saying, we don't need to prove every act, intent is just assumed rather than proven beyond a reasonable doubt. That directly violates the constitutional presumption of innocence.
I'm not convinced by the line of reasoning, honestly, because plunder remains fundamentally and unapologetically a malum in se offense. The intent is paramount.
Then why not prove every act?
Because, let me finish. We know this because the legislative framework of the plunder law explicitly includes the application of mitigating and extenuating circumstances under the revised penal code. You cannot apply mitigating circumstances, like acting under severe provocation or acting without the intent to commit so grave a wrong, to a strict liability malum prohibitum offense.
Okay, that's true.
Their inclusion in the statute proves that criminal intent is absolutely essential to the crime of plunder.
But how can you prove intent if you aren't required to actually prove every single act?
Let's use a specific analogy to clarify the mechanism of Section 4. Prosecuting a politician for plunder is highly analogous to prosecuting a mafia boss for a massive racketeering enterprise.
Okay, the RICO Act comparison?
Exactly. If an organized crime syndicate steals 2 billion pesos across 150 separate complex transactions over 5 years, you do not have to prove every single stolen dollar across all 150 instances to prove the overarching crime of the enterprise. You must still prove the predicate acts you do choose to present beyond a reasonable doubt. The standard of proof hasn't been lowered. The scope of what needs to be proven has simply been streamlined to make prosecuting systemic, sprawling corruption practically viable.
Streamlined. That is a very polite word for bypassing the rigid protections of the justice system. But let's follow that thread. That streamlining doesn't just apply to the substantive burden of proof in the courtroom. It bleeds heavily into the procedural reality before the trial even starts.
The preliminary investigations.
Right, so if the plunder law allows the state to be this flexible, how does that actually impact a person trying to defend themselves in the preliminary stages? The answer is that the system systematically kneecaps the defense. Let's look at the actual mechanics of these cases, starting with Sibian Vialda.
A massive administrative case.
Exactly. Norlina Sabayan was a bank officer. She was accused of making unauthorized deductions. But her defense was that this was a retaliatory, fabricated charge. She claimed her accusers had actually laundered over 64.2 million pesos through a massive error in the FastCard ATM system in Dubai.
Right. The system wouldn't debit the local accounts.
Yeah, the mechanics of the fraud were that the system allowed unlimited withdrawals abroad without properly debiting the local accounts in the Philippines. Sabayan allegedly caught this, but the perpetrators turned around and accused her to silence her. Now, to prove her innocence, Sabayan requested what lawyers call modes of discovery, specifically written interrogatories and the production of the bank documents showing the FastCard transactions.
She wanted the administrative body to compel the bank to hand over the records.
Yes, to prove she was being framed, but the administrative body denied her these basic tools, citing summary expediency. They basically said, this is just a preliminary investigation. We don't have time for a full discovery process. She was blocked from gathering the very hard evidence that could clear her name.
I see why you think that, but let me give you a different perspective on how these procedures are designed to work. We have to respect the absolute legal distinction between a preliminary or administrative investigation and a full-blown criminal trial.
But she needed the evidence then.
An administrative proceeding is not the venue for an exhaustive evidentiary trial. Think of it this way. A full criminal trial is the feature film. A preliminary investigation is just the movie trailer.
The trailer. Okay.
The trailer doesn't need to show you every single plot point, every line of dialogue, and the final resolution. It just needs to show you enough to prove that a movie exists, that there is probable cause. Due process in summary proceedings simply means the opportunity to be heard. Sabayan was able to submit her position papers. Her defense was on the record. Allowing full trial-style discovery at the administrative level would permanently paralyze the investigative bodies of the state.
Paralyzing the investigative body is a lesser evil than railroading an accused person who is shouting that they are being framed. And it isn't just administrative cases like Sabayan. The exact same procedural stripping happens in capital cases. Look at D. Chavis versus Ombudsman.
This is connected to the plunder case against former President Joseph Estrada.
Yes, Estrada was ousted from the presidency after massive corruption allegations. Jaime de Chavez, a businessman associated with Estrada, was indicted for plunder in connection with 1.85 billion pesos in state pension funds, the SSS and GSIS, being used to purchase shares of Bell Corporation.
A staggering amount of money.
The sheer magnitude of 1.85 billion pesos is hard to even grasp. Now, the prosecution's case relied heavily on the sworn affidavits of key individuals, like Willinho Cosier. Yet de Chavez was denied the opportunity to cross-examine these key witnesses during the preliminary investigation. The state was building a capital case against him, carrying the penalty of life imprisonment, entirely on untested testimonies. How is a defense supposed to challenge a so-called pattern of corruption when they can't even question the architects of the state's narrative?
Okay, we have to give our listeners the full context here. Discloses is actually the perfect example of why these procedural limits exist and why the state needs flexibility. Why couldn't Discloses cross-examine the witnesses during the early phases of the investigation?
Well,
Because when the impeachment of President Estrada began and the heat was turned up, Discloses fled the country. He went to China.
he did leave, yes.
His inability to confront his accusers during the preliminary investigation was a direct consequence of his own evasive actions. It was not a systemic failure of due process. You cannot flee the jurisdiction, evade the initial legal processes, let the system move forward without you, and then resurface years later claiming your procedural rights were violated. The law provides tools for defense, but it does not reward flight.
That's a compelling argument. But have you considered the deep systemic hypocrisy regarding how evidence is actually gathered and protected in this framework? If we're talking about what the law allows and doesn't allow, we have to look at the double-edged sword of the Bank Secrecy Law, Republic Act 1405.
The secrecy law.
Yes. The state routinely uses bank secrecy as a shield for the powerful and as a gag for the accused.
I don't think it's hypocrisy. I really think it's just strict statutory compliance.
Well, let's compare two cases. In the People v. Estrada case, former President Estrada opened a highly controversial trust account at Equitable PCIE Bank under the alias Jose Velarde. Now, there is an anti-alias law in the Philippines Commonwealth Act No. 142, which makes it a crime to publicly use a false name to deceive people.
Right.
But the Supreme Court ruled that because Estrada opened the account in front of bank officials who were sworn to absolute confidentiality under the bank secrecy law, his use of the alias wasn't public. The absolute secrecy of the bank shielded him from criminal liability for the alias.
Because the transaction was inherently private.
Exactly. The secrecy law protected him. But now let's look back at Sibayan. When Norlina Sibayan desperately needed the bank records of UCPB and BPI accounts to prove the 64.2 million peso fast card laundering scheme, the state invoked that exact same bank secrecy law, RA 1405, to deny her access. They said the accounts were confidential.
Because they were.
So when a powerful politician uses an alias in a bank, the secrecy law protects him. When a vulnerable accused bank officer needs records to prove her innocence, the secrecy law is weaponized to deny her the evidence. It is a terrifying double standard.
Let's pause on that for a second because the implications there are massive. But I completely reject the claim of systemic hypocrisy. And I base that rejection on the actual mechanism of the law. Strict statutory interpretation. The bank secrecy law operates objectively. It doesn't check the political power or the vulnerability of the person invoking it before it applies its rules.
It certainly seems to favor the powerful.
Let's break down the mechanism. Why does the anti-alias law exist? To prevent public deception. If you sign a document as Jose Velarde in a crowded town square, you violate the law. If you do it in a closed room with a bank manager bound by a penal statute of confidentiality, you haven't deceived the public. It doesn't trigger the statute.
But the result is that the powerful man gets away with hiding his wealth. The result is the mechanical application of the law. Now look at Sibayan. Why was she denied the records? In her case, she was asking the administrative body to compel the production of bank records belonging to completely third parties. Specifically, individuals named Ferdinand and Javelin Oriente.
Yes, the alleged actual launderers.
Right. But the individual who had originally authorized the bank's access to certain accounts, a woman named Ruby, was not the legal depositor of the specific accounts Sabine wanted to examine. The administrative body could not legally breach RA 1405 and violate the privacy of third parties just to expedite Sabine's discovery motion.
Even to prove innocence?
The law applies equally. It doesn't bend its rigid privacy guarantees just because it would make a particular defense strategy easier. It is not hypocrisy. It's the precise, mechanical application of the law as written. Precise and mechanical application can still yield profoundly unjust results. When you zoom out and look at this entire framework, you see a perfect storm. You combine the absolute impenetrable wall of bank secrecy with the summary movie trailer nature of preliminary investigations that deny cross-examination.
Right.
Then you top it off with a plunder law that explicitly allows the prosecution to skip proving every specific criminal act and relies on an undefined pattern. The state can allege a massive multi-billion peso scheme, deny the accused the tools to dig into the financial records under RA 1405, rely on uncross-examined affidavits at the preliminary stage, and then point to a vague pattern to secure a life sentence.
But the burden shifts dramatically. The accused is left fighting shadows. When the penalties are this severe, flexibility for the prosecution equates to a death sentence for due process. But we must acknowledge the sheer reality of what the state is up against. These laws were not written to prosecute a local official stealing a few thousand pesos. They were drafted specifically to dismantle vast, incredibly sophisticated networks of graft.
I agree, the target is massive.
These are syndicates that utilize dummy corporations, offshore accounts, and systemic institutional leverage to bleed a country dry. If we require the prosecution to prove every single fractional transaction in a 2 billion peso fraud scheme, or if we allow the defense to paralyze preliminary investigations with endless discovery motions and cross-examinations before formal charges are even filed, we effectively grant immunity to the most powerful criminals.
It's a risk, certainly.
The legal framework succeeds precisely because it is pragmatic. It provides flexible yet sharply defined tools to prosecute grand-scale crimes while adhering strictly to the procedural limits of administrative law and statutory privacy. It protects the state's ultimate right to self-preservation against those who would drain its resources.
Self-preservation of the state should never, ever come at the absolute expense of the individual's right to defend themselves. When the state is dealing with penalties as severe as life imprisonment, pragmatism and flexibility are simply unacceptable substitutes for explicit statutory clarity and robust, accessible procedural defenses.
Right.
If the law allows a person to be indicted for a capital offense based on a movie trailer that hides the crucial plot points and denies them the tools to uncover the truth themselves, the architecture of justice is fundamentally flawed.
It is clear we're approaching this from fundamentally different philosophies regarding the balance of power between the state and the individual. But I think, as we wrap up, we can acknowledge profound areas of convergence. We both agree that the anti-plunder law and these accompanying procedural frameworks are attempting to tackle incredibly complex, massive-scale financial crimes.
Absolutely.
These cases involve billions of pesos and layers of institutional complexity that absolutely stress test traditional legal boundaries.
Yes, on that we entirely agree. The sheer magnitude of the crimes these laws seek to address forces the legal system to grapple with its own limitations. Viewing these high-stakes frameworks from multiple perspectives is the only way to truly understand the immense friction between the interests of the state in rooting out corruption and the liberties of the individual facing the absolute power of the prosecution.
Well said.
There is so much more to explore in the source material regarding how these laws continue to evolve in practice.
Absolutely. We leave it to the listener to determine where the line between prosecutorial efficiency and strict due process should ultimately fall. Think back to our opening scenario. When a legal system is dealing with the systemic looting of a nation, deciding how to apply the law requires balancing the survival of the state with the absolute rights of the accused. The rules of the game are complex, the stakes are ultimates, and the blueprint of justice is constantly being redrawn.
A balance that must be struck with extreme care, because once liberty is taken, it cannot easily be returned.
Thank you for joining us on The Debate.